Good morning, all. We are Friday, December the 17th, the last real heavy trading week before Christmas. So, last Friday before Christmas. We're going to start off with Apple right off the bat here. It's gone exactly as to plan, which we kind of like that. So, hopefully, people enjoyed that trade and partook. We are trading at 169.5, as you can see. And that was technically perfect. And if you followed that, you pretty well got the rest of the index right. Indexes being Nasdaq, Russell, and S&P. So it's important to be ahead of the curve on all these moves, as you can say. Puts were very, very cheap on this yesterday morning, and here we are underneath all that level that we spoke about. It looked silly, didn't it, when we put those levels out. So here is your 60-minute, what we've done on Apple. Very clear there with your Murray. And people make the very big mistake on Ichimoku saying if you're above a cloud, you're bullish. You're below a cloud, you're bearish. Not necessarily so. So understand what you're doing if you're following Ichimoku as by itself or a novice to it. A lot of these, it's an old saying like reading the tea leaves, right? But look at the pattern and look what it's doing. Classic stuff there. We fall over quickly to the ES, and you can see almost identical. I wanted to run them next to each other. You can see what happened. The ES got ahead of itself as far as you can see with the cloud and the Murray is, but very, very similar. And the 4 hour, right? So there we go. So we are trading down another $3 or so on Apple. We are about 21 handles away from fair value on S&P. It is quad witching, so that is out there as well for us to watch. So here's your big double top on S&P. Here's your big trend line. We're in all this mess right now. We'll go back to our main page. And yes, that's exactly right. The daily tanking. Yeah, thanks for that. And look what it did. Lo and behold, we gave it up. We surmised that it would. As far as positioning overnight, we had those short apples on. Remember, we bought some cheap calls on Spurs a week out in case something silly happens. It is quadruple. Someone quadruple witching, you can 1 or 2 weeks out. A good levels is a good thing to work out as you're positioning. But I hazard to say, looking at this pattern, there's a ton of people bought up here. When we go to Nasdaq, it'll be more clear what I'm about to say. Hourly, pushing down. We're under that channel. Remember the caution last night? As a day trader, when it took off, we could buy it off 5 minutes. But the caution was it didn't actually test the channel. It's what it has this morning. So we're under all that. Look at your Murray levels. We're going to use them. We're going to quickly go to POC as well. Here's your 5 minute. We had more bearish news overnight as far as risk off Omicron. You had ECB and BOE following up with, hey, yeah, we'll raise if there's more inflation. You've got more angst over there in the Ukraine. Over Nord Stream 2, initially they came out and said, hey, it's going to be good to run January on the Nord Stream side, and the EU authorities said, no, it's not. So at the end of the day, you can see the political angst there. Obviously, it's Russia as well involved, so there's a little bit of that EU-Russia play going. At the end of the day, it's going to be very cold. Very expensive, as you saw in the prices there. So here we are on the short term. Minus 2/8 is down here. But you can see 5 minutes when it's very choppy gets you out of a very good position. So have a plan, understand. Don't live on hope that maybe this is going to happen, maybe that. And I hope we've steered you pretty clear from that. I know it's not pretty, some of the stuff I say, but that isn't the point of it. We come to remember what we just went through on the S&P and Apple. What do you think dominated the Nasdaq? So if you can understand Apple, 90% of the time you can understand the other indexes. You will get cases like 5 weeks ago where the Delta chase happened. Because of the low vol, it was a special situation. But again, we're able to pick that up because of that. So it also told you there was something weak and soft in the market. Because if you understand, that's when I started first saying they're going to take the trash out. And guess what they did? I dare say this move here, all the doyens of stocks that people average because they own it for much higher, they added to them up here. And just look at your high-low ticker. You don't need me to say the names, but they're going to be in there. Then we had all this, right? Just constant selling. So put that up against it. And there's our levels. And if you like, we can do a separate one just focusing on each of these indexes if that's what you want. We're pretty hardcore traders. So if you want to do it, we'll fit the time in basically because people, you want to look at investing. Sometimes that's just when it's a bad trade, when we call investment. I'm not saying don't investment, but let's be realistic. Some of these stocks have lost 30 to 40% of people have fallen in love and lived in. So there we have it on all that, and we're under, this is a 30. So use this grid. You can see the cage in there, what it's telling you. And just simple, we got way overvalued. Remember, I spoke about yesterday, plus 2.8, what that all meant. And here's our Apple, which we looked at on the short. I'm going to blow it up long term. And you can see the perfect 1, 2, 3 into the cloud. We're testing this high. And we can go through on the side if you want. You can go back and actually see what the fundamental reason was. This was kind of your death knell right there. So it's got a lot of work to do. And it's not over for that, I wouldn't think. We talked on natural gas real quick. And as you can see, I mentioned the European. And I've stressed this for a long time, and those that follow into our Vortex series each week, the hardened natty people all know there's a big difference between where your point is, basis, in the States, let alone in Europe. So someone just asked me why this is going down like with all the turmoil with prices in Europe. It's because this is Henry Hub, which is Sabine. This is the basis Sabine, which is right in the border of Texas and Louisiana. So the big effect there is either weather and demand coming out of those pipelines. But the big one, of course, is LNG, which is what comes out of Sabine. So we got under that level on that little shelf, 370 down. We sold off after this as EIA. So we'll see what we can do underneath here. To look at a little bit longer term, more perspective, you can see where we are in that, right? And so this is the daily. We're back at that lows right here. We filled that gap in, right? Isn't it funny how that works? And remember, that's basically like Chico rebalancing. We rebalanced pretty nicely here. And if you want to take Murray, perfectly 8/8, right? And there's a chart we have on the site that shows you this was a high from multi-years ago as a double top. Underneath here, a full move is all the way down here. So it can get to that quite easily, mathematically. And that's how we base it. Remember, that whole Apple trade was a bit of understanding crowd psychology, but also a bit of maths. So work them together. Market profile. Look at this. Your POC's up here. Does it get to it? But we got all this mess. We're right at those 2 days here. And last night I pined 2 days down, 1 day up, 1 day down. Do we get another one down? This is quite, as far as the end of the day, we know where it is now. I want to touch on this little beauty. So this is our Forex. We mentioned yesterday dollar yen, and it's kept selling off. That was the first indication it was all a riot yesterday. Then that filtered through to bonds, and bonds are a little bit different now with what's going on with the Fed and the stocks. So understand your Forex. and which ones play. Do not just look at the dollar index. Understand the different components, particularly the euro, the US dollar, and then the commodity countries, and because that has a big implication as far as demand supply going on in commodities. The obvious main one is the Aussie dollar, with iron ore, coal, China, Japan, Korea being their biggest trading partners. Canada is also an important one, and New Zealand to that aspect. This is what I wanted to talk to you about. The mighty Turkish Lire. So this is an example of so many things. Not having an independent central bank. And again, there's lots of good stuff on this on the website. But Erdogan just got involved. Not also when the crowd gets one way and they're getting destroyed. Now, our good friends out there that are pining that perhaps we're going to get the same thing in the Western world, or the more rational world. I don't know how you would describe it these days, but specifically America and Europe. This is a sort of sell-on effect that you got in the Weimar Empire and stuff like that way back in the day that we often hear Uber bears. But look how quickly it feeds on itself. So Turkey isn't exactly an end of the world country, right? It's gone out of control in the last few years with its leadership. I mean, I don't want to get too much in that. It speaks for itself. But basically, you've got a country with rampant inflation, hostile borders now, a community that's destroyed domestically. Like, how can you afford for anything with inflation? And they keep weakening their currency, and he doesn't seem to understand why, as he brings down these interest rates. And remember, yesterday we had a number of banks, Norway, Mexico, England, all raise rates. Others say so. That's a good cautionary tale. And if you had been short that, obviously you've made beaucoup money. Okay, let's go quickly through. So we went through the technical aspect, and you saw what's going on as far as natural gas. And you know what? We didn't touch on oil. We went, good point. So oil is still trapped in that. We've got a squeeze coming on here on the Tenkan and the Cajun. So what we want to see is two things. It's either going to do this, cross through, signal destruction, or it's going to open up like this did. Pretty simple stuff, right? Keep all this stuff simple. And hopefully you've done your homework and understanding how this all works in the context of, remember, we use Ichimoku within a nova wave constraint with the other factors. So we don't want you saying, man, what to do when it's here, right? Or here. You should have a game plan ahead of time. It really, as Peter would say, grinds my gears when I see that stuff goes out here. But people seem to love that. So here is your on an hourly. So here's pretty clear, right? You got that cloud which coincides with the breakup. So look for 1 to 3 confirmation points. The top was real easy, double top. Look where we were on our Murray, and we've come down, and we know we're in that pattern. As far as for the short-term trading today, let's bring this up. You've got your pivot point where it came off early this AM. Now, pivots don't work as good on oil because of global market versus almost what we used to call a put trader, like ES and stuff like that. So we have come off S1, and look what we're trying to get back over the Cajun. So that keep it real short. You got your S1 and S2. Go back or print out this page on the chart if you don't have it. If this is a long corrective mode, that's your target on the upside, right? If it's that little pennant we saw in the daily, here's where your support is. Keep it that simple. Okay, let's have a look at this while we have a quick look. That's the S&P 5 minutes. So overnight, the equities are up around 1% in Europe. The commodities are mixed. As we saw, copper has regained a little bit from yesterday's destruction. The VIX is traveling over 40%, 20%. Hope that wasn't a Freudian slip for the bulls. Bond yields flat to lower. As far as FX goes, the commodity ones are all down as you'd expect. Aussie, Canadian, Kiwi. The safe haven currencies are all up, and that'd be the Swiss franc, the Japanese yen, and the euro. Their central banks all met yesterday, and they are on the website if you want to read on that. As far as the other source of safety, the Bitcoin, I'm kind of saying that tongue in cheek, is hanging around 47. So that's the overall there. Let's have a quick look at the actual in Asia. You can pretty well guess what happened with a lot of this. So we know last night we had one more central bank to go. That was the Bank of Japan. And they made no changes in their stance. But they did reduce the amount of emergency asset purchases. So that was a negative for those that, as far as ETF buying, etc. Overnight in news, the big winner was FedEx, up nearly 6%, or $13, nearly $14 there, after it beat experts. Experts, I'd say that tongue in cheek as well. So their FY22, they rose. Oracle is lower, which is interesting because this one probably hurt a few funds out there because that's been red hot since they're doing a 10 billion buyback. But the reason it is, the Wall Street Journal was out saying they're in discussions to acquire Cerner. Cerner is CERN, and they're up a mighty nearly $14.50 or 18%. The tag on that is 30 billion. So then it brings down the question, well, if they're going to buy $10 billion worth of stock and spend 30 billion here, none of that really makes sense, right? I don't know. I haven't looked at their balance sheet, so much cash they have. So do they cancel the 10 billion or do they have enough cash? But the market's thinking that. We talked about yesterday Rivian, the brand new IPO a month or so back with a really pretty electric truck, the one truck of the year, as I recall. So that's down 8% after earnings. They, remember, are only just coming out, so I'm not sure where they base their earnings on. But again, people, for some reason, are basing things off these analysts. It's down 7.7% at the magic $100 mark. That got to over 170 in that rush after the IPO. US Steel is down 5% after they guided lower. Now that's significant given what steel is, infrastructure, etc. And Johnson & Johnson is down $3, nearly 2%, after preference was given to the mRNA COVID for their vaccine. And again, this is why it's been banned in a number of countries. J&J's blood clotting issues for those under about 30 years old. But I mean, so that would favour obviously Pfizer, Moderna over J&J. That was also out yesterday. Okay, so overseas, we had the Nikkei down 1.8%, Hong Kong down 1.2%, China down 1.2%. You see the theme, and that was expected, obviously, after how the Wall Street behaved yesterday. Sensex was down 1.5%. That's down 3% for the week. India's been the hot one, right? South Korea was actually up and up for the week. Australia was up as well. They're all industries. It was up a tad and up for the week. So the strength has been South Korea and Australia. Interesting with the meetings earlier this week on trade and other matters between those two nations. Other economic news, let me see if there's anything. We did see a really impressive trade number out of Singapore. And elsewhere, we mentioned the BOJ. So over in Europe this morning, we had lower than expected inflation, 0.4 versus 0.5, still a hot number. It did bring out someone from the ECB to say, hey, if it keeps going up, we may do more. Believe it when you see it. Germany's iPhone number, much watched. That's their business climate. Climate was 94.7. They're expected 95, and it's down for 96. But really, again, question the analysts, why would that be hot with what's going on over there, right? So when you look at expectations number, look at the real number. And so you probably should have been positioned already for that, the way we have been going. Retail sales are actually higher in England, which is kind of impressive when you see what's going on over there. I don't want to bring up the Ashes to our English viewers, but just suffice if you're not English that that's a big deal. And Australia is, how do you say, kicking their butt. Over there in Spain, we had a much bigger trade deficit, 3.4 billion euro versus 2.4. That I need to look at the breakup on the relevance. So that's pretty well what we got. We have no data to speak of out in the US. What we do have today is quadruple witching. So you can get silly moves, which is what we've had in the last few days. And it explains a lot of that rampant move up and rampant move down, right? So that is about, we have oil popping up here as we finish up. Good luck. Have a great weekend, everyone. This is school holidays if you're not already on them. Those that have kids, good luck with that. I know I'll be blessing myself around 2 minutes to 3 because we have Christmas coming up. We will be very light. I have already been light for a month or so, as I said, pretty well just trading a couple of the big caps here and the major futures S&P. Like and share if you like our product. Follow us on the socials at tradiers.com. Anything you'd like us specifically to talk about, we will do that. The whole goal is to get self-directed traders more independent with what's actually going on in trading, in keeping the market in front of you to avert being one of those caught on those big down sweeps. It's kind of our main goal, or one of our main. Anyway, bless you all. Have a great one. Enjoy your families and friends this weekend. And be careful out there today.